Hey everybody, welcome back to another video. Up until today, I've only talked about selling covered calls in regard to options. Today, we're going to give you guys a rundown on a recent cash secured put that I sold. But first, a brief background about myself. My name is Wayne, I'm 44 years old, and I retired from law enforcement in 2020. And even though I did so with a generous pension, soon thereafter I began to regret a few things. The first being not saving more money. The second, not taking sooner advantage of tax-deferred contributions, and last but not least, not investing in the stock market. So today I've gone back to work full-time with a mission to generate multiple streams of income and build out that generational wealth. So I'd love for you guys to subscribe, follow along in my journey. And for today's video, we're going to talk about a recent cash secured put that I sold. And if you're not familiar with a cash secured put, I'll give you kind of a brief rundown. So first and foremost, when you sell a cash secured put, you are entering a contract to buy 100 shares of a stock at an agreed upon strike price with an expiration date. So it's really important when you sell that cash secured put, you have to have the cash collateral in your brokerage. This is often the #1 barrier to entry, right? So whatever stock that interests you out there, if you want to sell a cash secured put, well, first and foremost, you have to have the cash if you were to be assigned those 100 shares. Now, in doing so, the party who sells the cash secured put, and in this example it's me, they will receive a premium. And that premium is mine to keep. So regardless if I'm assigned or if the contract expires worthless, I get to keep that premium. Now, it is important when you are selling cash secured puts or covered calls that you know about implied volatility. I just recently put out a video talking about how implied volatility has such a factor when it comes to premium. In not two stocks are created the same, not two premiums are the same, so it's really important to understand what implied volatility is. Some other stock factors you want to keep in mind if you are going to sell a cash secured put is the ex-dividend date and the earnings. Now, the stock that I'm going to talk about today is Netflix. So Netflix does not have a dividend, but as it turns out, today is going to be the day they release earnings for Q4. So with that date upon us, implied volatility for Netflix is currently through the roof, which means there are a lot more juicier and significant premiums that you can make. And a couple of days ago, I sold my first cash secured put for Netflix in 2023. So let's talk about Netflix as a whole. Now, in the past, I have previously sold cash secured puts against Netflix, and I was never assigned, meaning I received a premium and the contract either expired worthless or, I paid a small amount back to close out that position earlier. So you can see in 2022, I sold a total of 3 cash secured puts against Netflix. And if we look at I know it's difficult for you to see, but it's a total of $373 that I received for those 3 contracts that I sold against Netflix. So not a bad deal. I haven't been selling many cash secured puts against Netflix because the stock has been so much in a decline. But we've seen a turnaround, if you will, in the last 3 months plus. So with earnings being today, I wanted to give you guys a play-by-play on a recent cash secured put and arguably some mistakes that I've already made. So we'll take a look here at Netflix. I should have had this pulled up. And you can see that the current share price of Netflix is $319. Now, for the year, they're down about 37%. In the last 3 months, though, and of course, I've got the slowest internet that you can think of when I'm doing a live video, you can see they're up about 20%. And now if we scroll down here, let's take a look at the 52-week range. So this year, they saw a low of 162 and a high of 526.64. And as I mentioned, today is going to be earnings release day after hours. So guys, believe it or not, in just about a half hour or so, Netflix is going to release their earnings information for Q4 of 2022. So the reason that has a huge role in the cash secured put that I sold is because you've got 2 people on opposite sides of the coin. You've got the one person that says, oh man, Netflix is going to go ahead and stumble, right? They're going to go way below what the current share price is of $320. And then you have others that say, no, Netflix is going to do great. So, it may fall a little bit, but it's certainly not going to drop below, let's say, $300. So I am bearish on this stock. I do believe that Netflix is not going to meet earnings or beat earnings, let's just say, but I don't think the stock is going to fall that significantly. So because I think that Netflix is not going to fall that significantly, I want to generate cash flow by selling a cash secured put. So I don't own any stock of Netflix. You can see here, guys, I've got no positions, but I currently have sold a cash secured put. So before we get into my cash secured put, let's go ahead and look at the options chain. And I am using Robinhood as my brokerage. So I'm going to click on sell, put, and you can see here I've got some different expiration dates. I'm going to go ahead and leave it for tomorrow. So today is the 19th of January. It's a Thursday. Earnings are being released today after hours. And so my cash secured put will close out tomorrow. Let's just go ahead and scroll down, right? I mean, we'll go back to some of the benefits of selling a cash secured put. Let's say you actually want to own 100 shares of Netflix. You've got the cash, but you don't want to pay $320, which is the current share price. But let's say you were willing to buy Netflix for $300 a share. Maybe, you've done your workups, you've done you've looked at the financials and you're like, all right, if Netflix reaches $300, then I want to go ahead and buy it. So you could, of course, place a limit order and say, listen, if Netflix reaches $300, then buy 1 share, 10 shares, 50, or 100. Or you could sell a cash secured put. And essentially, you see this $6.20 premium. If you multiply that by 100, because everything with cash secured puts, as well as covered calls, is in denomination of 100, you could, in essence, receive $620 for entering a contract to buy 100 shares of Netflix if the strike price reaches $300 by tomorrow. So let's go ahead and scroll down, and you guys will see here the -1 indicates that I have a current contract. So this means that I am already a position holder for this option. And so if we expand on this, you can see here, guys, the current implied volatility is through the roof, right? 216%. Most of the stocks that I sell, covered calls or cash secured puts, they have an implied volatility range of 20% to maybe 70%. So the spike in implied volatility, it really comes down to it's earnings week, right? There are a lot of players out there that are looking to make money. And you've got those who are bullish and you've got those who are bearish. I'm kind of a realist. I do think that Netflix is not going to beat earnings, but I don't think they're going to plummet, right, to what we saw for the 52-week low of like 160 or 170s or 180s. So we'll go back here to the contract and I'll show you guys where I made a mistake, because right now the current value of this contract is $428. But if we look at the actual transaction itself, when I sold this cash secured put, I only was able to make $310. Why is that? Well, it's kind of a mistake on my end. I wrote this contract 2 days ago on the 17th. If I had waited a day or so, I could have, hypothetically collected more premium. Maybe I could have even, had selected a lower strike price. But it is what it is, right? You guys are kind of learning from, just the live experience of me. So let's get the rundown here. On the 17th, I sold a cash secured put, which means, right, I have to have $29,250 in my brokerage account, right? Robinhood or any brokerage is not going to allow you to enter a cash secured put unless you have the collateral in your brokerage. Now, currently, the share price is 300 and some change, but if Netflix goes down to $292.50, and it does so by tomorrow, then I would be assigned 100 shares of Netflix. But I would be assigned at this price point of $292.50, regardless if it goes down to $250, $230, $200. So that's the danger about a cash secured put. You are locking in that purchase price to the agreed upon strike price. But because I entered that contract, the buyer paid a premium of $310. That premium goes directly to me. It's deposited to my brokerage account, and it's mine to keep no matter what transpires over this transaction. So we're going to go ahead and pause the video here, and I'm going to go ahead and come back after earnings, and we're going to see how this unfolds. Now, there's what I think and there's what I want. What I think is going to happen is that Netflix is not going to beat earnings. I do think that there's going to be they're going to come up short, and I think that Netflix, the stock is going to fall slightly. Do I think they're going to fall below 292.50 by tomorrow? I don't think so. But I do, however, have a contingency that if it does, then I can simply either get assigned and say, yeah, it sucks to be, a shareholder when I own the stock for more than it's currently worth. But I also know from experience that implied volatility in the options chain is often elevated for Netflix throughout the year. So I could turn right around and sell a covered call and, make premium that way until the share price goes back up to my cost basis. I can also roll the position, so we'll kind of explore that option as well. But for the time being, to give you a summary, I have sold a cash secured put. I am saying essentially that I don't think that Netflix is going to go down to 292.50 by tomorrow. Or maybe I'm saying, yeah, you know what? I hope it does, because if it does, I want to own this stock at this price. But the reality of it is I don't, guys. Right now, I do not want to own 100 shares of this particular stock. But I was paid a premium of $310. This is mine to keep no matter what happens. If, the strike price does not go below 292.50, then I keep this premium 100%, and the contract essentially expires worthless. So let me go ahead and pause the video. We're just about a half hour to 45 minutes out from earnings, and then we're gonna see, we're gonna see the stock do something. Currently, right now, for the day, Netflix is, I believe, down. So they're down about 3% for the day. For the week, I think they've been trading sideways. No, they're down about 4%. And then for the month, they are up about 11%. Let's see if we see Netflix just drop sharply from earnings. And of course, that'll have a factor in what I do for the cash secured put. Hey, you guys are an awesome audience. I am loving the comments. I'm appreciating you guys hitting that like button. But more importantly, I'm glad that you guys have subscribed and you're looking to follow along on my journey. So let me go ahead and hit pause, and I'll see you in a few minutes. Good morning, everyone. So it's the following day, January 20th, Friday morning, and you guys can see the current share price of Netflix is about $336. They're up just under 7% for the day. So that must mean some good news came out from yesterday's earnings release. Let's go ahead and take a look at the article here from CNBC. The title, Netflix blows away expectations on subscriber numbers. And if we scroll down here for the result EPS, so 12 cents versus 45 cents per share, revenue was 7.85 billion. Global paid net subscribers, this is really the big one, 7.66 million adds compared to what was expected at 4.57 million subscribers. So in line with the title. They missed EPS, but they really exceeded the total amount of global subscribers. So how does this factor into my trade? Well, if we scroll down here, again, currently the share price is well above the strike price of $292.50. That's when I entered the contract and I sold that cash secured put. Guys, in full disclosure, this is my second go around at making this video, and I made a mistake. I was using the web interface, and I should have used the phone interface. I don't use the web interface when I buy to close, and I inadvertently submitted another sell of another contract for $292.50. So I was a hot mess there. I didn't quite know what I had done wrong. But thank goodness, because it would have been a disastrous and very expensive mistake. So I'll try to kind of summarize this. A few days ago, I sold a cash secured put. I received $310 premium. Again, my belief was that even if Netflix did go down, it wouldn't go below the strike price of $292.50. But it turns out that Netflix actually did rather well. And today, the share price continues to elevate, which means that the contract that I received $310, it was currently worth about $1 or $2. This is where I made the mistake. I inadvertently opened a new contract. I had to buy to close that one. So when it's all said and done, we can kind of forget about these mistakes right here, because I quickly had to go back and buy to close the contract I inadvertently opened. So these two transactions, this is where it's at. I started with a $310 premium, but I paid $2 to buy to close. And that's the important takeaway. Anytime you sell a covered call or a cash secured put, it's really important that you understand how to buy to close early to lock in those profits. And that's exactly what I did. So if we go to my spreadsheet here, these are all of the cash secured puts that I've sold so far in 2023. There we have it, right? This is the line item. Netflix, I sold a cash secured put on the 17th. This was my collateral / strike price. This is what I received. And then I spent $2 to buy to close, which means I lock in a total profit of $308. And then I always will give it a gray bar to indicate that that transaction is closed altogether. And you guys can see here, not bad so far in 2023. Now this is cash secured puts, not covered calls. I keep a separate sheet. I've made about $1,600 so far, but I do have 2 active cash secured puts that are open. I've got one on Apple, I've got one on Celsius, and I am going to be pushing out some more content that talks about the pros and cons, the good, the bad, the ugly, the expensive. So stay tuned on that, but not bad. $308 in just a few days. Yes, I had to have the collateral of nearly, $29,300. But it turned out great for me on this transaction, and I'm going to go in more depth on future videos. But guys, thanks so much for tagging along and following me on this journey of selling a cash secured put for Netflix. We'll see you on the next one.